When a couple decides to split, it's common for both spouses to rely on the idea that when the matrimonial home is sold, each will get 50% of the equity. But many people forget about the mortgage. Specifically, sometimes a spouse will move out and just figures it's not fair for him or her to pay the mortgage and the other spouse should because the other spouse is still living in the home. Other times, when focus is solely on spite, if one spouse has been paying the mortgage alone, and that spouse is the spouse who ended the marriage or moved out, then the resentful spouse might stop making mortgage payments. Here's the big catch that can really hurt you. If both spouses are named on the mortgage, then you must ensure that the mortgage is paid until the property is sold and that mortgage is discharged. In other words, regardless if it's just your spouse's name on the title or deed of the property, if your name is on that mortgage with the lender, with the bank, here's what can happen. If your soon-to-be ex suddenly stops paying the mortgage for any reason, then you will both be responsible for making up the lost payments and the accrued interest when the property sells. But here's the kicker. If you miss enough payments, the bank or the lender can force power of sale. If that happens, the bank will dictate when the house is sold and for how much it might be sold for. Depending on how much equity is in the house and how much interest has accrued and the additional penalties and admin fees related to the power of sale, combined with a possibly lower sale price, you might end up with a lot less money than you thought or no money at all from the sale. And furthermore, it will drastically affect negatively both of your credit ratings, which will affect your ability to get a new mortgage or rental or new credit cards or anything for that matter after you split, for several years possibly. As a divorce real estate specialist and a certified divorce specialist, I've had clients who've hired me to sell the house, and before I get there with my professional photographer to prepare for the listing photos, the bank has seized the property. I've also had cases where I've sold the matrimonial home. Then, when one spouse had me find them a new home, their dreams were shattered because their new mortgage application was declined, and they had no idea that their credit rating had plummeted because of their ex. They might have been pre-approved for a mortgage when we set out looking for those homes, but in the 3 months until the closing date, their credit rating updated based on the complication from the sale of the home or simply the ex not paying the mortgage. If your soon-to-be ex stops paying the mortgage, speak with your lawyer because it's likely in your best interest to maintain the mortgage payments, and you'll likely get an increased portion from the sale of the home to reimburse you for covering the extra 50% of those payments. Your lawyer can advise you if you get reimbursed through the equalization process. If you're not sure what that means, check out my video on this channel called Equalization in Net Family Property. I'll put a link down below in the comments for you. If you have any questions about this video, buying or selling a matrimonial home, or mortgages, just send me an email, mike@thedivorceguy.ca, and I'd be happy to answer your questions for you. Also, be sure to check out my friends at divorcespecialistgroup.com. You're never obligated to work with anybody, but they do have the best professionals that I've had the privilege of working with. And be sure to download their free divorce checklist on their website. There's some great information there, including information about the mortgage and the banks. And don't forget to click on thumbs up for this video.